So this past Wednesday, Foot Locker crashed 30% after they announced their earnings and after reporting a large quarterly loss and weak guidance. Now, let's zoom out to the monthly chart because we need to reconstruct the charts. So again, this is the monthly chart, and I was anticipating price hitting this monthly settles level at $26 and then making another lower low, because if you look at the monthly chart from $60+, that's what we had. Right. So the other reason why I had liked this setup was because this leg down took out the pivot low to the left. But that's not what happened. Now, when you scroll down to the weekly chart, this is that basing candles that we saw on the monthly chart, and the price structure is not ideal, but nevertheless you have to respect larger time frame zones. All right, so before we can continue with the analysis, let's actually look at the results. So shares of Foot Locker plunged 29.4% on Wednesday after the company announced a large loss based on GAAP for the crucial holiday quarter and followed with weak forward guidance. For its fiscal fourth quarter 2023 ending February 3rd, Foot Locker's total sales grew 2% year over year, though comparable sales fell 0.7%. And thus that translated to a quarterly net loss of $389 or $4.13 per share. Now the CEO said the company saw meaningful accelerated sales trends relative to the third quarter, as well as improvements across multiple key performance indicators. Foot Locker also reinvested its markdown in order to end the year with leaner inventory levels than previously expected. All right, so when you mark down merchandise, your profit margins decrease and your expected sales decrease as well. All right, looking ahead to the new fiscal year, Foot Locker issued guidance to be flat from fiscal 2023, plus or minus 1%. She goes on to say that 2024 will serve as a cash rebuilding year, and we therefore are not resuming a dividend at this time. That's big too. It shows responsibility, discipline, but sometimes when you are in a stock, you're in it for the dividend as well. CFO had to say the following: we're confident, however, that our strategy will unlock longer-term shareholder value, including a return of quarterly dividends and share repurchases over time. All right, so let's just scroll back out to the monthly chart. And we're going to keep this band on. Again, if you scroll back to 87, you can see how price gravitates to this level at, say, $28. And this plunge broke the uptrend line that was established on the lower time frame, in particular the weekly time frame, right? Higher high, higher low, higher high. The close here invalidated, again, the short-term uptrend. Question is, where does price go next? Well, look at this surge in volume, this candle from November 27th. And so potentially you have what I'm calling a weekly buy order. Let's see how things look like on the daily chart. So that candle, that extended range green candle, was a gap higher on earnings. All right, so this is a level that I anticipate price stalling and potentially bouncing back. How high will it go? I think it can go $4 or $5. And then from there, we have to wait for price action to tell us what's going to happen next. But I think the plunge stalls, and we should get a pullback potentially for the next leg down. But as of now, price and the buyers at and near the $22, $23 levels, it's going to protect price from moving further down. Thanks for watching. Subscribe. Please like the video.